G'day, guys. Greg Silverman here. CIOs and bow ties. Come learn with me session for this week, the week ending October 15th. Man, where has this year gone? Anyway, behind me, we have the Great Wall of China. I've never been. I'd love to go. It's pretty cool, doesn't it? Wow. And this is in dedication to this article. Right. China century missing in world's most valued equity. Oh, what's this about? The dearth of Chinese enterprises at the top of the market capitalization rankings is a referendum on the world's second largest economy. The past 2 decades were widely assumed to usher in the transition from the American century to the Chinese century, as evidenced by the most populous nation's burgeoning gross domestic product, dominance in manufacturing and global trade, and most recently advancing technology poised to overtake just about everything in the West. The world's money says not so. China's juggernaut is a shadow of its perceived self in the market capitalization of the world's 10 largest companies, 7 of which are American, accounting for more than 78% of the group's shareholders' equity, according to data compiled by Bloomberg. Aside from a brief ascendancy with 4 or 42% of the top 10 in 2008, during what was then the worst US recession since the Great Depression, China remains an also-ran. Investors increasingly eschew fossil fuel. China is the number 1 polluter with 30% of CO2 emissions, twice the amount produced by the US. As climate change's existential threat accelerates, the preference for innovation, and especially clean or alternative energy. Not sure what to highlight there, but okay, let's keep going. So what do we have? Top 10 companies. This should be of the major, most valued companies in the world. Apple is the biggest, 2.4 trillion. Microsoft, Aramco, Alphabet. Where's Amazon? Oh, down there. Amazon. Okay. Facebook, Tesla, Berkshire, Tencent, Taiwan Semi. Okay. With the exception of Saudi Arabian Oil Co., which went public in December 2019 as the world's biggest company, only to be immediately devalued and displaced by Cupertino, California-based Apple and Seattle's Microsoft. Last year, most of the rest of the top 10, Seattle-based Amazon, Mountain View, California-based Alphabet, Menlo Park, California-based Facebook, Palo Alto, California-based Tesla, Omaha, Nebraska-based Warren Buffett, Berkshire Hathaway, Shenzhen, China-based Tencent Holdings, and Hsinchu, Taiwan-based Taiwan Semiconductor Manufacturing are technology, communication, and consumer discretionary concerns. China is little more than 4% of the most valuable companies and less than 6% of its weighting in technology. Berkshire Hathaway is the only relic of 20th century industry in the lead group, according to data compiled. Much different. The largest companies in the world in 2008. All right, let's see. Exxon. So remember, 2008 we had the commodity boom in the early 2000s, and then we had the mortgage crisis in 2008. Okay, Exxon, PetroChina, GE, Gazprom, so all China Mobile. So all of the top 4 were, industrial or petroleum companies. China Mobile, Ind&Com, Microsoft, Walmart, Petrobras. Wow, so this was all energy, huh? The second largest economy is now restraining its most powerful corporations, including Hangzhou-based electronic commerce and content creator Alibaba. Social networking, payment systems, and entertainment provider Tencent Holdings, and the Beijing-based passenger transportation services maker Didi Global. The Nasdaq Golden Dragon China Index, which includes 98 major Chinese companies publicly traded in the US, has declined 14% since July 22nd, represented losses of 120 billion, and jettisoning Alibaba from the top 10, according to data compiled by Bloomberg. Now, the Chinese are practicing a different form of capitalism. Even before the government crackdown, when Saudi Aramco became the number 1 company 20 months ago, Apple, Microsoft, Amazon, Alphabet, Facebook, Berkshire Hathaway, and San Francisco-based Visa represented 71% of the most valuable equity, of which technology was more than 75%. China was just 12% at that point, an improvement from no presence among the top 10 in 2016, when the group was entirely American, according to data compiled by Bloomberg. The more recent China foray into technology still is eclipsed by corporate China's top 10 market cap in 2011, when PetroChina Co. and Industrial and Commercial Bank of China, both based in Beijing, account for 21% of the group's equity, when fossil fuel was almost 50%, and technology was less than 30%. That's what I'm saying. I've got an important point to make at the end of this. The paucity of China equity among the most valuable firms is accentuated by unprecedented demand in the stock market, where companies raised a record 1.2 trillion by initial public offerings in 2020 and 909 billion this year, according to data compiled by Bloomberg. Industries classified as innovation and technology represent 80% of the top 10, up from 30% in 2011, when Apple was valued at less than 4 times its annual sales, compared with more than 7 times its revenues today. Tesla shares, which went public in 2010, changed hands at 17 times the electric vehicle maker sales, according to data compiled by Bloomberg. No one reflects the trend more than Cathie Wood, founder and chief executive of Ark Investment Management, best stock picker over 3 and 5 years amongst 419 equity mutual funds or exchange traded funds in the US, with a minimum of 5 billion. Let's get this into the record. According to data compiled by Bloomberg, Ark Innovation ETF, her largest ETF, sold most of its Chinese holdings by the end of June and sold the rest last month. Okay, super interesting. The comment that I wanted to make about this article is, well, let's not lose sight of the long term. And I don't know when things will change or when they ever, what's going to happen in the future is as unknowable to me as anyone else. However, if you go back to 2008 and energy was dominant, in 2020, tech is dominant. What's the odds in 2030 that it's going to be something different? I would say pretty good. So, we might be reading this article at the zenith of technology for this decade. I have no idea, but that's something worth considering. All right, guys, hope you enjoyed this article. It's kind of interesting to me, and it's all over the place. If you like what we're doing, if you're learning, most importantly, you need to be learning. If you're picking up knowledge from us, subscribe. Please subscribe to our YouTube channel. Apparently, it is good for all. But anyway, thanks for joining us. Subscribe, and we love our audience. Thanks for coming. Send feedback. Greg Silverman, out for now.